This is chartingwealth.com, our market review for Friday the 24th of April 2015. As we get to the end of the month, of course, April, as you can tell from this chart, is typically a good month for the market. And it so far, so good. We had some questions here around the 20th. That was expiration Friday when there was some crazy volatility that dropped things down, but it's since recovered. We're looking at the 2-day chart on the IYY, which as you can see is the total market index. This is an ETF, an exchange traded fund. It's the way we always start. And look at the nice drive up here over the last 2 days. You can see our MACD, moving average convergence, divergence. We have a divergence going as the market has been moving up. These lines in the back, the light green and the light red here, this is the derivative oscillator. And again, the MACD is also an oscillator. It stands for moving average convergence divergence, our most favorite of all indicators. This blue line here that you see is what we call a trend line, and we have a decent trend line going. That's this blue line underneath. Let's see if we can get this bigger. There, you can see it better. And it's a nice trend line going up. It's connecting 3 candles there. And of course, you can see where the 2-day moved over, going up back on or about the 14th, and it's continued to move up since then. We did have a drop off here, but we never saw the 4-day move over. So we did not get out of the market necessarily. It depends on how you call your shots, and we'll show you a little bit more about that when we go to the 4-hour. Now here's the 2-day trend line on the 4-hour chart. You can see how there was a break. This is back on the 17th where, and again we're looking at that 2-day candle across those. It broke over going down and then moved its way back up and actually crossed over back on the 27th, going back up again. Because we had no crossing going down on the 2-day chart, you may very well have stayed in and continued to ride this out. But as you can tell, we did have a loss and a drop over, but it has since recovered. And actually, starting today, this was starting today, I'm talking Thursday. This is where the market ended on Wednesday. Thursday, it opened up and then continued to move up substantially, actually busting through the Bollinger Bands. The Bollinger Bands are volatility bands, and they're like rubber bands. The market always comes back inside of it, but you can see where huge up moves today. So hopefully you were in and you were profiting from those strong up moves on the 4-hour chart. Now, let's go ahead and look at, we'll go back to the 2-day chart, and we will change over to SPY, which is a Standard & Poor's 500 big companies. And you can see on the 2-day chart here where it crossed over going up back on the 10th. And again, same kind of struggling that you saw here around the 20th. Sort of between the 16th and the 20th, where the market fell off. And you can tell how the market continued to move up over the last several days. And what we see way back on the SPY was the crossing over, well, not way back, but the 10th, on the 2-day chart going up. It crossed over about the same time that the derivative oscillator did, and has continued to build up through today. Not nearly as high a peak in the S&P. It didn't shoot up past the Bollinger Band like the total market did, but it did move up and is actually closing higher than back on the 16th. It took it until today, end of today, to actually move up that high. Now let's look at the 4-hour chart in the SPY. Here's where we see it pushing through the Bollinger Band. That's where it did it, like on the last one, on the IYY. So you do see a substantial move up here toward the end of the day. And again, it had crossed over going down and then has moved back up over the last few days. And you're seeing where it is right now. So again, don't forget, April is a good, strong month. Typically, it is the last of our good 6 months. We're getting into the summer doldrums soon. Sell in May and go away. So don't hold your breath expecting all of this to continue. Now, could it? Sure. We listen to the charts, not the noise. But please pay attention. I urge everybody, if you don't have a copy of the Stock Trader's Almanac, you need one. Mr. Hirsch goes through all sorts of trends that show themselves again and again and again, and boy, it can give you a real heads up on where things go certain times of year. So you can look at a chart, think the chart's working great, and then all of a sudden find the chart not working, wondering what's going on. That's because you didn't pay attention to the time of year that it was. And what happens when people sell in May and go away? Well, they go away and you all of a sudden see little volume in the market and erratic movements up and down. So now let's go back to our 2-day chart and let's take a look at my favorite index. This is the Qs, the NASDAQ 100, and we're on the 2-day chart again. We can see back on the 20th, crossed over much later than we saw with the IYY and with the SPY. It crossed over after the derivative oscillator had moved into positive territory. And again, that was that down day that we had, that down 2 days or so from the end of the week to the beginning of the week. It's where it recovered back up. And then, of course, it's continued to push up. It is now above the 2-day trend line, and you can see a substantial bump up over the last 2 days. Now let's go and look at the 4-hour chart to get a little bit better feel for what things have done. And you can see a nice continued clean move up. NASDAQ moved over on the 4-day chart, moving up right around the 20th, the crossover followed by the derivative oscillator, and nice movements up today, actually over the last several days. So this is where the NASDAQ is. Again, there's our 2-day trend line well above that. And that is looking good right now. Now again, it's getting toward the end of April, so be careful. Watch the markets closely day in and day out if you're taking advantage of these up moves. Now lastly, let's range back out to the 2-day chart and let's go out to the to gold. Let's take a look at gold and see what gold has done. And of course, gold is, like we've been saying, it is trying its best to move down. It is moving down slowly. There is our trend line, if you can see that. Going the wrong way. Not much of a trend line, but gold is pretty much heading along with it. Down, you can see the derivative oscillator, and the MACD is not yet crossed over going down. One would have thought it would, but it hasn't, just because there's so much residual here. And look, that's the big buildup. And it is still not moved below the open back on the 6th. It's still not moved below, well, I guess it has, just barely. Well, it's not moved, yeah, it has just over the last day or so. It has moved down below that. So that's one reason derivative oscillator is slow at moving over, and the MACD hasn't even crossed yet. Now, and we called gold going down just because it didn't seem to have enough steam to go up. We can see a little better, particularly if you go back, you can see where gold crossed over on the 4-hour chart going down way back. On the 4th, it's sort of been seesawing around, but now it's continuing to make pretty healthy strides down at this point. And of course, it has a lot longer that it can go down because it came all the way up to, what was that, about 117.47 was the high. And it has, whatever range, everything can go to zero, not gold, of course, but it could go touch that low that we saw back in March down at 110. So just be careful. The Bollinger Bands, again, are showing us that gold is in a very close trading range. So pay attention, but it's continuing to move down. And you can see the derivative oscillator and the MACD are both in those regards. So if you were short gold, you probably feel pretty good. If you're long gold, you're probably a little concerned. So just continue to watch it. And again, this is where the markets have ended on Thursday. Some idea, hopefully, of where they're going on Friday. Hope that you have been trading and investing well. Encourage you to continue to go to chartingwealth.com, the website. Follow the markets with us, and also go in there and learn some of the things that we teach. Again, chartingwealth.com. Thank you so much for joining us. Good investing.